Welcome back to the Deep Dive. Today, we're going to be looking at some interesting financial news stories. We've got kind of a mix of market trends, some surprising stock performances,
Mhm.
and even a little glimpse into how global events are impacting the financial world.
Absolutely. Sounds like another fascinating deep dive.
Yeah, should be fun. Okay, so let's start off. There was a Market Watch piece on two companies that were just added to the S&P 500, Apollo Global Management and Workday. Both saw their shares rally,
Hmm.
which, I mean, isn't surprising, but what I found interesting was that Apollo's stock has surged over 90% this year,
Wow.
and Workday's is down about 3.5%. Big difference.
Yeah, that is a big difference. It really goes to show that while being included in the S&P 500 is a big deal for a company,
Yeah.
their individual stock performance often reflects, a different story. Apollo, which is an investment firm, seems to be doing very well, possibly because of strategic moves like their insurance partnerships. While Workday, a leader in cloud-based workplace services, might be dealing with, broader economic factors or even just tougher competition.
So basically, inclusion in the S&P 500 is more like a vote of confidence.
Yeah.
That might attract investors, but the company's actual performance is what drives their stock value in the long run.
Exactly. It's just one factor to consider when looking at a company, not a guaranteed path to success.
Got it. Now let's shift gears a bit and talk about a broader market trend. Momentum mania, as Bloomberg has been calling it. Bitcoin hitting $100,000 is a pretty big headline.
Yeah, it definitely grabs your attention.
Yeah.
And this frenzy isn't just limited to Bitcoin either. We're seeing it across a range of assets, from meme stocks to even tech companies with like shaky fundamentals.
Hmm.
Classic momentum investing. Buy what's going up, hoping it'll keep going up.
Kind of like riding a wave and hoping it doesn't crash.
Exactly. Bloomberg actually quoted Bill Gross, the well-known investor,
Right.
describing it as riding the herd wave. He's basically saying that the party could end very suddenly.
Okay, so what's causing this surge in momentum investing?
Seems to be a few things. We've got a lot of liquidity in the market, sustained economic growth even with a few problems, and recent rate cuts by the Fed.
Okay,
All of this is leading to a risk-on sentiment among investors.
interesting. But, I mean, is it sustainable?
Yeah, that's the million-dollar question. Bloomberg also brought up some concerns about market froth and a possible bubble, particularly in areas like cryptocurrency.
Right.
Richard Bernstein, another prominent investment strategist, actually called Bitcoin a bubble on steroids in the Bloomberg piece,
Wow.
highlighting how it relies on liquidity rather than, solid fundamentals. It's impossible to say when or how this might end,
Right.
but investors need to be careful, understanding that fast rises can often lead to equally fast declines.
Definitely something to keep in mind.
Mm.
Speaking of shifting landscapes, Bloomberg also highlighted some big energy deals happening in Nigeria. Chapel Energies, which you might not have heard of, acquired Equinor's Nigerian unit.
Yeah, this is a good example of something we're seeing more of. Major international oil companies are selling off assets in Nigeria.
Okay.
The country's got a lot of problems like aging infrastructure and a lot of oil theft. Makes it a less attractive place to invest for these big companies.
So you're saying that smaller, more adaptable companies like Chapel are seeing opportunity where these bigger companies see risk.
Exactly. And this deal gives Chapel access to assets like the Agbami oil field, which gives them immediate production and cash flow.
Interesting. Now let's move over to China. Bloomberg reported that their central bank started buying gold again last month after a 6-month break. This comes as gold prices hit record highs in October.
That's a big development. It shows that China's committed to diversifying its reserves and protecting itself against currency depreciation, even with the high gold prices. They seem to think the strategic value of gold in the long term is more important than the price changes we see right now.
It kind of makes you wonder if they know something about the future of gold prices that we don't.
Yeah, it's definitely something to pay attention to. Central bank moves can often be early signs of what's to come.
Right, good point.
Mhm.
Let's shift focus to Europe. The outlook for French stocks isn't looking too good.
Yeah.
Bloomberg reports they're on track for their worst year since 2010. They're doing much worse than other European markets.
Yeah, the political situation in France is definitely a big factor here. President Macron's decision to call a snap election earlier this year caused a lot of uncertainty,
Right.
and then the government collapsed, and there are worries about the country's finances. All of this has hurt investor confidence.
The article also mentioned that French banks and insurers have been hit especially hard? Any idea why that is?
They're heavily invested in French government bonds, so when borrowing costs rise, it directly impacts their financial health. Also, any economic slowdown caused by the political instability would hurt their business too.
So even though some investors think the recent rebound in French stocks is a good sign, others are unsure about a full recovery.
Yeah, it all depends on how quickly the political situation gets better
Yeah.
and if the new government can fix the financial problems.
So lots to consider there. Back in the U.S., let's look at the latest jobs report, which was covered by both CNBC and the Wall Street Journal. The numbers are kind of mixed.
Yeah.
Hiring picked up in November. We added 227,000 jobs, but the unemployment rate also went up a little to 4.2%.
Right. This suggests that the labor market is cooling down, but it's not collapsing.
Okay.
This aligns with what the Fed wants, what they call a soft landing for the economy.
Can you explain what a soft landing means? I think some of our listeners might not be familiar with that term.
Sure. Essentially, the Fed is trying to lower inflation without causing a recession.
Right.
A soft landing is when the economy slows down gradually, which cools down inflation without a big jump in unemployment.
Sounds like a tricky balancing act.
It is. And the fact that wage growth also stayed moderate at 4% year over year gives the Fed some breathing room. It means they don't have to cut rates drastically right now.
Right.
And it suggests that worries about a wage price spiral might be overblown.
You mentioned wage price spiral. What exactly does that mean?
A wage price spiral is when rising wages lead to higher prices for goods and services,
Okay.
which then makes people demand even higher wages. It creates a cycle of inflation that's hard to break. The Fed is always worried about this because once it starts, it's tough to control.
Got it. Now, the Wall Street Journal article also pointed out some interesting stuff about how President-elect Trump's policies might impact the job market next year.
Yeah, his stance on immigration, especially his deportation plans, could have a big impact on the number of available workers,
Right.
especially in industries that rely on immigrant labor.
Yeah.
It's something economists are thinking about, but no one really knows how it'll actually play out.
Okay. Now, for a story that really caught my eye, the Wall Street Journal reported that BlackRock's making some big moves into private markets. They've spent almost $28 billion on acquisitions recently.
Wow, that's a lot.
Yeah.
It seems BlackRock wants to make investing in private markets as easy as investing in ETFs,
Oh, interesting.
which, if you remember, they completely changed the game with ETFs years ago when they bought iShares.
So they're trying to do for private equity, infrastructure, and other alternative assets what they did for index funds.
Pretty much. They think they can use their technology, data, and network to make private markets more transparent, liquid, and efficient.
But the article pointed out some differences between these markets. Private markets are already getting more popular, and the fees are a lot higher than in public markets.
True, but BlackRock's in it in the long haul. They're not just chasing quick profits.
Right.
They want to get a piece of what they see as a huge and growing market, especially among big investors like pension funds and insurance companies.
So they're betting that as private markets become more common, the demand for indexed and standardized products will go up.
Exactly. They're setting themselves up to be a major player in this new investment landscape.
Okay, last story before we move on. This one's for all the AI fans out there.
All right.
MarketWatch reports that this year's top-performing AI stock isn't NVIDIA, the big name everyone's talking about,
Right.
but a lesser-known company called SoundHound.
Oh, wow, that's interesting.
Yeah, their stock has shot up over 575% this year, even more than NVIDIA's gains.
Wow. What's their story?
Well, they specialize in voice technology software powered by AI.
Okay.
And they've been really smart about branching out beyond the automotive industry where they first got started.
That's a good move.
Yeah, they're now in sectors like restaurants, financial services, healthcare, and insurance, showing how versatile their tech is. And their acquisition of Amelia, an enterprise AI software company, has expanded their reach even further.
Makes sense.
And get this, they've also been making some impressive tech advances. Their new large language model, Polaris, is giving them better accuracy and lower costs.
That's a great combination.
It is. And here's another interesting thing. NVIDIA is both an investor in and a partner of SoundHound,
Oh, wow.
which says a lot about their technology. They're working together on projects like an in-vehicle voice assistant using a large language model running on NVIDIA's D-Drive technology.
Mm.
So SoundHound's success is kind of a win for NVIDIA too.
Absolutely. It really shows how the AI world is all about collaboration. where smaller, innovative companies can team up with giants like NVIDIA to achieve incredible things.
Yeah, it's a really dynamic and fast-changing field. And stories like this highlight how important it is to stay ahead of the curve and realize that unexpected winners can come out of nowhere.
Definitely agree with that.
So we've covered a lot of ground here, from S&P 500 additions and this whole market mania thing to energy deals, China buying gold, and the troubles with French stocks. Plus, we dug into the U.S. jobs report, BlackRock's move into private markets, and that surprising AI underdog story.
A lot to think about, for sure. It's really interesting to me how all these stories we've talked about are actually connected in some way.
Oh, yeah. Give me an example.
Well, like the energy deals in Nigeria, on the surface, it's about companies adjusting to a changing energy world.
Okay.
But if we zoom out a bit, it really shows the global shift towards renewable energy sources.
You mean moving away from fossil fuels and towards a more sustainable energy future?
Exactly. The world's trying to deal with climate change and find ways to depend less on traditional energy sources. So we'll probably see more changes like this in the energy sector.
Makes
Yeah.
sense. And it sounds like there could be opportunities for investors who recognize these trends.
Definitely. It's not just about getting rid of investments in traditional energy companies. It's also about investing in the companies and technologies that are leading the way to a more sustainable future.
I see the connection now. What about another example of how these stories are linked?
Well, think about China going back to buying gold. It might not just be about diversifying their reserves. It could also be about positioning themselves strategically in a world where the US dollar's power might be weakening.
Wow, that's a big thought. You think the dollar could lose its place as the world's top currency?
I don't think it'll happen overnight,
Right.
but maybe a gradual shift in the global financial systems,
Okay.
China's growing economy, plus worries about the U.S. government's financial policies and political instability could make some countries look for other strong currencies.
And in that situation, gold, with its history and reputation as a safe haven, becomes more appealing.
Exactly. It's a way to protect against uncertainty and a potential store of value in a world with several major economic powers.
That's really interesting. It shows how financial news stories that seem separate can actually give us clues about bigger global changes.
Right. It reminds us that we need to look beyond the headlines and understand the whole picture. Connecting the dots and seeing how things fit together is crucial in the financial world.
I like that. It's like we're financial detectives, putting together clues to solve the mysteries of the global economy.
Maybe not detectives, but definitely curious people trying to understand a complex and ever-changing world.
And that's what the deep dive is all about.
Uh-huh.
So let's talk about the U.S. jobs report. Seems like there's a lot to unpack there.
For sure. We have the main numbers, but we also have to think about the underlying trends, the things that are affecting the job market,
Right.
and what it all means for the overall economy.
And as we mentioned earlier, what President-elect Trump might do adds another layer of complexity to it.
Absolutely. His views on immigration, trade, and government spending could really change things in the job market.
So where should we start with this?
Let's go back to those mixed signals. We had good job growth with 227,000 new jobs in November.
Okay.
That shows the economy is still moving forward.
But the unemployment rate went up a little to 4.2%, which could mean the job market is weakening a bit.
Exactly. And wage growth stayed at a moderate 4% year over year. That's a really important number for the Fed.
Okay.
It tells them that the labor market might not be pushing inflation up as much as they thought.
So the Fed's walking a tightrope. They want to help the economy grow, but also keep inflation in check.
Right. The rate cuts they made were meant to boost the economy.
Right.
Now they have to figure out if they should cut rates more or if that might make inflation worse.
Sounds like they're navigating a tricky path with challenges on both sides.
That's a good way to put it. And the information they use to make these decisions isn't always clear and can be interpreted in different ways.
That's where having experts like you comes in handy.
I appreciate that.
Yeah.
I think it's really important to break down these complicated economic ideas and explain them in a way everyone can understand.
You know what struck me about this jobs report is how the overall numbers can be different from what individual workers are experiencing.
Yeah, that's a good point. The big picture data sometimes doesn't show the real struggles people are facing in the job market.
Like the Wall Street Journal mentioned that long-term unemployment is at its highest point in almost 3 years.
Right, and while some industries are doing really well, others are struggling, leading to job losses and uncertainty for those people.
It's a good reminder that behind every statistic, there's a human story.
Absolutely. The economy isn't just about numbers, it's about people's lives, their jobs, and their hopes for the future.
Well said. Okay, let's move on to BlackRock's big move into private markets.
Yeah, this could really change the investment world in the coming years.
As we talked about earlier, BlackRock wants to make it easier for more people to invest in private markets.
That's a big goal, given how private markets are typically not very transparent and it's hard to get your money out quickly.
The Wall Street Journal compared this to when BlackRock bought iShares in 2009, which changed the ETF industry completely.
Yeah, there are some similarities.
Right.
In both cases, BlackRock uses its size, technology, and expertise to simplify and make a complex market more transparent.
But there's some big differences too. Private markets are naturally less liquid and riskier than public markets,
Right.
and the fees are a lot higher.
True, but BlackRock is thinking long term. They aren't just looking for quick profits.
Right.
They see private markets as a huge and growing opportunity, especially for big institutional investors.
So they're betting that as more investors look for alternatives to traditional stocks and bonds, the demand for private market investments will keep rising.
Exactly. They're setting themselves up to be a leader in this changing investment landscape,
It's a bold move. Only time will tell if it works out.
for sure. But no matter what happens, this shows that the world of investing is changing, and the lines between public and private markets are blurring.
It's a reminder that investors need to stay informed and be ready to adjust to these changes if they want to succeed over the long run.
Absolutely. The old way of just buying and holding a mix of stocks and bonds might not be enough anymore.
Right.
Investors who are open to new types of assets and strategies will be better prepared to navigate today's complex markets.
That's a great transition to our last story for this part, about that surprising AI company that's doing better than even the biggest names in the industry.
Yeah, SoundHound. They're a perfect example of the dynamism and innovation happening in AI.
Like we said, their stock is up over 575% this year
Right.
because they've diversified, expanded their tech capabilities, and partnered with big players like NVIDIA.
It's a classic example of a smaller, more nimble company taking advantage of a fast-growing market.
It shows that even in a field with giants like NVIDIA, there's room for newcomers to disrupt and succeed.
For sure. Investors shouldn't underestimate the power of innovation and the potential for unexpected winners to come out of nowhere.
SoundHound's success also shows how connected the AI world is.
Definitely. They're not trying to beat NVIDIA.
Right.
Instead, they're using NVIDIA's technology to make their own products better.
It's a win-win for both companies. It shows how collaboration is important for driving innovation in AI.
Absolutely. Things are changing so fast in the AI world that no single company can do it all alone.
Well, that brings us to the end of this part of our deep dive. We've explored how financial news stories are connected, took a deeper look at the U.S. jobs report and BlackRock's move into private markets, and talked about the success of that unexpected AI company. Well, we've really gone through a lot. Market trends, some unexpected stock performances, and how global events are affecting the financial world. What are your final takeaways from all this?
You know what really stands out to me is just how fast everything's changing. Technology, geopolitics, market dynamics. It's like the world's moving at warp speed.
You're right, it really does feel that way. It's a lot to keep up with.
We need a way to understand these changes, a lens to view them through. And I think it starts with recognizing how interconnected the world really is. What happens in one place can ripple across financial markets and economies around the globe.
Yeah, like those energy deals in Nigeria, driven by a global shift in energy, and China buying up gold, maybe signaling a change in the global financial system.
Exactly. Staying informed means more than just reading the headlines. It's about grasping the context, the underlying currents that are shaping the financial landscape.
Connecting the dots, seeing the patterns, and understanding the why behind the what.
Yeah, and something else that's really important is to accept that the future is uncertain. We can't predict everything,
Right.
but we can be prepared for different possibilities, come up with scenarios, and build resilience.
That reminds me of what we were talking about with the U.S. jobs report. The numbers point to a cooling job market, but there's still uncertainty about what's going to happen with the economy.
Right, especially with President-elect Trump's policies still unfolding.
Exactly.
So instead of trying to predict everything, we should focus on being adaptable, diversifying our investments, staying updated on new trends,
Okay.
and being ready to change course when we need to. These are the key things to help us navigate a world that's always in flux.
So we should embrace uncertainty, see it as a chance to learn and grow, rather than something to be afraid of.
I love that way of looking at it. And lastly, I think it's crucial to keep a long-term perspective.
Okay.
It's easy to get caught up in the day-to-day news and market fluctuations, But as investors, we need to stay focused on the fundamentals, the long game, and not let short-term noise distract us from our goals.
So time is our ally in investing. Patience, discipline, and a focus on the long term will help us weather any storms and ultimately be successful.
Well said.
Before we wrap up, do you have any bold predictions for the coming year? Any trends that particularly stand out to you?
You know, I don't like making predictions.
Yeah.
But if I had to pick one area to watch, it would be the intersection of technology and finance.
Oh,
We're already seeing it with things like fintech, blockchain, and artificial intelligence.
right.
But I think this is just the beginning.
So you think the financial world could look radically different in just a few years?
It's definitely possible. Imagine traditional banks being challenged by big tech companies, financial transactions happening instantly across borders,
Wow.
investment decisions made by algorithms instead of human emotions.
That's both exciting and a little scary.
Yeah, it is. But one thing's for sure, the pace of change is only going to get faster. Those who are open to new possibilities, who adapt and change, they're the ones who will thrive in this environment.
That's a great thought to leave us with. So to our listeners, stay curious, never stop exploring, and remember, in the worlds of finance and knowledge, there's always something new to discover.
Absolutely. Learning never ends, and that's what makes it so rewarding.
That's a great point. Well, until next time, keep learning, exploring, and we'll see you all tomorrow morning with new headlines from major financial magazines.